This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today on Back Roads of Illinois. I am Cesar Delgado. This time for the greens. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today on Back Roads of Illinois. I am Cesar Delgado. This time for the grains markets and the cash grains markets with Ed Usset from the University of Minnesota. We are joining with Max Fisher from National Feed and Grains Association. We were talking about the grains markets and counting on the report. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This time for the grains markets and the cash grains markets with Ed Usset from the University of Minnesota. Hey Ed, how are you today in the Twin Cities?
Caesar, I'm doing just fine. We've got a little bit of a return to some cold weather, but not enough snow in the forecast for me. I like to ski, and I'd like to see a little more snow.
Me too. Ed, we get the world supply and demand report on Monday. However, I want to get your response to the report about the corn yield on the report. What is your position in the yield?
Well, Monday's report, Caesar, was quite a shocker. I'm not going to call it the most shocking report I've ever seen. I've been watching these things for 4 decades now, but it might be in the top five. I don't know, before that report, I don't know anyone uh, that I can recall who thought that USDA was going to increase the corn yield as they did by half a bushel per acre. I think the vast majority of experts were looking for a modest decline, 1 to 2 bushels, maybe three. Um, just last week, I had a talk with a southern Minnesota farmer with several farms, and he was telling me that he didn't know anyone in his orbit who thought that who was happy with their yields, where their yields came out less than they expected. So he was just dead certain that that yield was going to be pared back, and hence the surprise. And not only that, we got a few more harvested acres. So it's a big crop.
It was pretty frustrating with the corn yield on Monday. What is your prediction on the planting intention report on March?
Well, I'm reluctant to make any predictions right now. Uh, there just aren't a lot of choice. There isn't a good alternative to corn. I mean, soybeans are out there. That's one alternative, but the price for new crop soybeans isn't that great either. The price for new crop wheat, of course, winter wheat's already planted, but spring wheat, uh, none of the numbers look very appealing. So I have a hard time wrapping my mind around a big change in planted acres, one way or another, in the year ahead.
Of course. How are you doing on the beans markets for this week? Because we saw a downturn to the beans markets for December before the holidays. Where's the fundamentals on the beans markets?
Well, we are exporting to China. We're putting more exports on the books. The soybean market's a huge disappointment. I was traveling in South Dakota and North Dakota in November. and early December. And we had that bump in the bean market. It was not a small bump. Cash prices were up $1.25 at one point in soybeans from their harvest lows. And I was prodding farmers. I didn't know where the market was going, but I'm like, geez, it's up $1.25. Don't you reward something like that? Make a sale or two? And I should have shut up, Caesar, because it started to go down right after I started to talk about it. And we've pretty much backtracked most of that territory. I like to think we have another rally yet to come in soybeans. We've got the exports. We're at least getting something on the books, and of course, the domestic crush demand is growing, and that's a good thing.
Are you watching for the world events for the fundamentals on the grains, Ed?
Caesar, how can we avoid the world events? We have a new one every day. Things going on in Venezuela, the implications for the energy markets, and of course, the energy markets now cast a large shadow over corn. They've cast a large shadow over corn for years now with ethanol, but with the renewable diesel and soybean oil demand ramping up, it too is the shadow cast over the oil market. So we can't avoid it. I'm not a world expert uh, on oil economics. I don't think there's going to be a lot of Venezuelan oil that's going to interrupt things quickly, but over time it could.
Do you have some final thoughts about the data from the Department of Agriculture, Ed?
Well, it's got a lot of people concerned. I do note that just yesterday, Pro Farmer put out for their first recommendations for pricing 2026 corn and soybeans. Interesting. I don't know if I agree with them on that. It's only mid-January. I like to think that we'll have a better shot in the months ahead, driven by what I'm not sure. Caesar, but I like to believe we'll have a better bump and a better pricing opportunity for new crop. But it is noteworthy. Pro farmers like I'm not getting caught like last year where the highs came early. Just a reminder to your listeners, the highs, for example, your best opportunity to price 2025 soybeans new crop came in February, which is an odd time for a new crop high. And I think Pro Farmer is wondering if this year isn't going to look like last year. So they don't want to miss any sort of bulge in the market.
What are you watching for this growing season?
All eyes are in South America. And, if I'm expressing a willingness to wait for a better opportunity. But even as I express that, I got to admit that everything I read about South America says that it's a big crop and it's getting a little bit bigger.
All right, Ed. Thanks for coming with us today.
Thank you, Caesar, and stay warm.
This is Ed Usset from the University of Minnesota Twin Cities. On today for Back Roads of Illinois, I am Cesar Delgado. You have a great. I'm here with Max Fisher from National Feed and Grains Association. Hey, Max, how are you in Kansas?
Hey, I'm doing great, Caesar. Yeah, I guess you remember that's where I was at last time that we talked, and that's where I'm originally from. But for today, I'm in Virginia, which is where National Grain and Feed Association is located.
Max, let's start with our conversation about the grains markets, especially with the wheat market. How feel about the wheat markets for right now?
Unfortunately, the price is very low for wheat. We have an ample amount of wheat worldwide. Of course, Russia being the big exporter of wheat, and they've had a number of good crops in a row, and we just haven't been able to climb out of this. So prices are not where we want them to be, nor are U.S. exports. We would like to be moving more than we currently are, but we're moving as much as we can. And as for corn, we got some very bearish news out of USDA as we found out our crop that we harvested this fall was even bigger than we thought. It was already record crop. Now it's even more of a record large. So we have a lot of corn too, which is depressing prices. Soybeans is the crop actually where there's maybe some potential there on the price side. Just if you just are strictly looking at ending stocks, they're not historically large. Definitely enough, but not historically large. And China coming back into the market definitely has helped solidify the soybean marketplace. We've they pledged that they would buy about 12 million metric tons, and anyway, they appear to be on their way to fulfilling, hopefully completely fulfilling that commitment. But anyway, so yeah, that's kind of a snapshot or a very brief background of where we are as far as the crop markets.
Do you have any concerns about the world supply and demand report from Monday for the yields trends?
The U.S. farmer is really good, really good at producing, and it is amazing how it seems like the trend, normal weather year after year, the yields just keep getting higher and higher. And that happened again this year where yields were very good. And anyway, I wouldn't bet against the U.S. farmer to be able to keep producing at high levels. We need more demand. I know Congress is considering a year-long mandate of E15. That would help use up some of this corn for sure. And we just have been through a period of time where some of our export competitors like Brazil and Russia they just have not had crop failures. Crop failures happen from time to time. Like, we don't have perfect weather in this world. But we have gone through a fairly extended period here where they just have not happened for those two countries in particular. And it's, eventually it will, and then we'll help, between hopefully increasing demand. These lower prices do spur demand creation, which is going to help. And then eventually there will be some kind of supply shortage. There always is, it happens. And but anyway, for now, we're in a very ample position as far as grain supply.
I will say this. We need the farm bill for this economy. Farmers are struggling with the grains markets. Right, Max?
That's correct. Yeah. We realize that, the farmers are definitely going through hard times with these low prices, for an extended number of years. And the farm bill does have some support. It will not. It's not as much support as what the farmer would have received, from say higher prices in the marketplace. So I don't want to act like that makes the farmer whole. It definitely doesn't. Between the higher, just things have anyway, for the farmers, we know that it's a struggle, and we're glad that there was, as part of the One Big Beautiful Bill, some of those Title I programs are called, for farm programs were included in that. We're glad.
True that especially with these trade barriers.
Yes, there's President Trump has been very busy trying to make better trade deals for the United States. And, as part of that, there's been some resistance along the way. And at times it's harmed agriculture. But fortunately, you got China back on track buying. And there have been some other markets opened up. And, we're looking into the future kind of at long term. And we see some good things coming on the trade front from these trade deals.
Right.
Max, we were talking about the grains markets for right now. What is your position on the wheat markets than previously years?
I guess looking at the current crop that's been planted, at least in the area where I'm from, in Kansas, which is a pretty major wheat production area, there was good weather this fall for planting wheat. So the wheat that did get planted went into soil that, good conditions, and has received, enough rainfall to germinate and to get off to a good start. So, at least for our winter crop in the United States, I'd say we're off to a good start, on having hopefully another, good production year in the United States. That's not always the case, of course, with wheat, especially where a lot of it is grown in some areas that sometimes can have some arid weather. So anyway, so compared to years past, I'd say we're in a better position than we have been in some of the other years, for sure, as far as being able to produce a wheat crop for this 2026 year.
What is your final thoughts about this harvest season, Max?
We're very fortunate. We had a good crop this year in the United States. Wheat, corn, soybeans, all of them were good. And quite frankly, we needed the big crop in this country, given how low the prices are. So we needed the volume to help make up for the low price level. I hate to think of what it would have been like if we'd had, less volume and same low prices, to the extent that, that's a world market impacting prices. For this upcoming year, always optimistic, hoping that we can harvest more strong crops in this country, hopefully grow demand too, and, grow the prices as well. Anyway, that would be my current perspective on the prices on the crops.
Thank you guys for your time, and enjoy your time.
Yeah, always good to be with you, Caesar. Thanks for having me.
Max Fisher from National Feed and Grains Association on back roads of Illinois at the NAFTA convention.